Now, the rounds of annual results from our major food and beverage listed companies have been a mixed bag, much like the weather today around the country. You know, everything from snowboarding down south to surfing weather in the north, we have had a mixed bag of weather. Now, one phrase that certainly dominated the description of these annual accounts is the impact of COVID-19. It was just more about the wording of that differentiated the market positioning of these companies, whether it read due to the impact of or despite the impact of, can make so much of a difference to wrap around those numbers. Now, joining us to discuss and give an overview of our country's listed agricultural and food and beverage companies is equity analyst for Forsyth Barr, Guy Hooper, who joins us now. Good evening, Guy, and thank you for taking the time to join us. With so many numbers going on, I thought it'd be great to get a bit of a handle and overview around some of the trends and discrepancies between these companies. So let's start with the introduction on the disruption to the delivery of some of these results due to COVID, and of course the general change in corporate communications because of lockdown versus these traditional events and engaging shareholders within these results.
Yeah, good evening, Sarah, and thanks for having me on. No, it's definitely been an interesting time, and I guess it's much the same for a lot of us, just getting used to the Zoom culture that now exists. In terms of delivery of the results, I mean, companies were able to continue much effectively undisrupted from a corporate communications point of view, with annual results calls still taking place, and certainly high levels of engagement. And like you said, certainly a fair few questions just around the COVID impacts and whether those have been tailwinds or headwinds.
Absolutely. We'll get to a bit of a summary after we work through some of the results of these companies. Now, we do need to acknowledge you don't deal with dairy or kiwi fruit. So let's kick off, though, with fruit through the edible and drinkable kind. Delegates Group, New Zealand's largest listed winemakers, net profit increased despite COVID and despite these US wine sales taking a hit. How did they manage that?
Yeah, look, Delegates was a strong result, and really was volume driven, although that volume was largely into the UK, or that volume growth, was largely into the UK, as they saw an annualization of a convenience customer they picked up in the prior period. US was also showed good signs of growth. I mean, Delegates probably benefiting from a few factors there. Number one being channel exposure. So a lot of wine companies who are overexposed to the food service channel would have had a much harder time. However, Delegates has a really good position within the convenience and within the retail channel, which with people no longer eating out and drinking at home, their sales were able to hold up. The other reasons, I suppose, helping them out was just the size of the brand, and you saw a lot of consumers flock to brands they don't know and trust. And then within New Zealand or within the US, imported wine, New Zealand seems to have bucked the trend, with most other countries going back much further. So New Zealand wine, and in particular Marlborough Sauvignon Blanc, has performed relatively well.
This just says a bit more about the UK drinking culture under lockdown of cheap Sav as opposed to fine Pinot Noir in New York. Now, trading throughout the COVID-19 lockdown without its challenges for Scales Corporation, the home of Mr. Apples, last week reported a net profit after tax for the group of $27.8 million. Is this a sign the apple and pear industry is on track for that $1 billion mark?
Yeah, look, the apple and pear industry has been performing reasonably well as of late, and Mr. Apple in particular has been investing into new premium varietals or trademark varietals, in particular aimed at the Asian markets, which have been able to achieve some reasonable prices, and as these new plantings mature, should improve in terms of yield and lifting volumes. From a COVID perspective, Mr. Apple had a relatively soft period, although that was largely down to a large domestic crop in China, and then the timing of the Chinese lockdown meant that their sales window was effectively shortened, and there was a higher supply of domestic apples in the China market, which weighed a little bit on prices.
Another
We would expect that to normalise into the next year, though.
Now, another success with an $18 million profit for the last 12 months to June, up 58% on last year. That's huge, as the increased fair value gains for livestock for New Zealand king salmon. How did they maintain and grow this with that challenging supply chain environment, especially with air freight?
Yeah, look, in terms of the headline numbers for king salmon, it's worth noting there are a large amount of accounting treatments that can impact the year-on-year profit. So really the underlying profit of $11 million was a step down, and New Zealand king salmon sells 75% of its product into food service. And as we mentioned earlier, that channel has really been impacted by stay-at-home orders around the world. So from a this year perspective, result-wise, I guess a little softer than we would like to see, but not unsurprising given the disruption that channel has experienced. Certainly a little bit more inventory on the balance sheet at the moment as they look to sell, I guess, much like many companies, I guess, shift their exposure more towards that retail customer.
Now, moving a little bit more into the manufacturing side of things, Scullerup results overall in line with prior corresponding periods?
Yeah, look, Scullerup, there are two divisions within Scullerup. One is the industrial and the other is the agribusiness. Now, the agribusiness was really the standout in the period being with a lot of, they sell essential consumable products used in the milking of cows, and they effectively saw I guess some concern from customers about not having stock early on, and so they saw a large, I guess, pull through of demand early on, which helped boost that result. The other good or encouraging sign was the US market, which represents a reasonable growth opportunity for them. They continued to gain a bit of market share there in the agribusiness.
And the companies that took a hammering, Rural Supplies Group PGG Wrightson reported a second half-year loss of $15 million to June 30. The elephant in the room, should they really have sold seed?
Yeah, look, ultimately on the sale of their seed and grain business, ultimately it becomes a question of price. And at the time, we certainly viewed that price as attractive. I mean, if we look at it against, again at the time, against the peer multiple group and against recent transactions, that price was at about a 20% premium. And so we viewed the transaction positively.
Manuka honey exporter Comvita's net loss narrowed to $9.7 million in the year to June 30. There has been some, in the recent couple of days, some excitement around the new vision and new CEO to turn this company's fortunes around. How are shareholders feeling about that?
Yeah, look, certainly encouraged by the new management team. And if you think about that result in terms of a half on half, they went from a first half loss to a second half profit. So a good turnaround in terms of that, although was a company that's had a net tailwind from COVID. So a beneficiary, I guess, of the medicinal qualities of honey. I mean, it simplified its strategy going forward. They're aiming to reduce SKUs, their stock keeping units, and really focus on their core growth markets of the US and China. So, look, I mean, it's early days for both the new management and the new strategy, but definitely encouraged by the early signs.
And headwinds or no headwinds, how are you generally feeling about the reported success, which a lot of them didn't fully take into account a 12-month of this impact of COVID, and where the next 12 months could likely go? How are you feeling at Forsyth Barr around this particular portfolio?
Look, it's really varied across the sector, and as we've just seen from the results commentary, it kind of depends on what your channel exposure is. So, look, for those companies exposed to food service, of which seafood is one that is generally higher weighting to food service, look, I suspect it's probably going to be or remain reasonably challenging for a wee while as we get, I guess, a turnover of food service operators and a return in comfort of the consumer to start eating out again. And also, I guess, compounding on that is those freight charges, in particular around fresh air freight capacity is obviously a lot lower, which has meant that the freight rates being offered to these companies is much higher, and that weighs on margin in the short term. But for the most part, these companies are, I guess, in a somewhat privileged position as essential businesses and able to continue operating, and have certainly learned a few production lessons during the first lockdown and first iterations of higher alert levels. So going forward, should be able to adapt at a better pace. Although, look, COVID-19 certainly adds a lot of uncertainty to the outlook, not only from a recurring lockdown perspective, but also from how the consumer ultimately reacts, and I guess the economic overhang that has yet to manifest itself.
Yeah, absolutely. There'll be a lot of boardroom chat around the words, how pandemic proof is this and what is our exposure to that? And potentially we're going to have more resilient businesses out of this. Thank you so much for taking the time to join us, which is an excellent way of getting an overview from Guy Hooper, the equity analyst for Forsyth Barr.
This is Sarah's Country.